this will be the halving, but it will be the single most consequential halving in the history of Bitcoin, because you're talking about, it's the equivalent of someone coming in the market saying, I'm going to buy $8.5 billion of Bitcoin a year for the next 4 years, guaranteed. That's the demand impact, right? $8.5 billion, $23 million a day at the current price. Now, that's a huge amount, but more importantly, that's a huge demand supply shift in the year when the demand via the ETFs has jumped by a factor of 4 to 10 times the daily supply.
Michael Saylor, the founder and executive chairman of MicroStrategy, is optimistic about Bitcoin's prospects in 2024, particularly during the fourth month when the highly anticipated halving event is scheduled. According to Saylor, a prominent business figure and staunch Bitcoin advocate, this upcoming event will mark a historic moment in the cryptocurrency's 15-year journey. While previous halving events have had significant impacts on Bitcoin's price by reducing its supply, the 2024 halving is poised to be unprecedented due to the approval of several spot Bitcoin ETFs by the U.S. Securities and Exchange Commission earlier in the year. With institutional investors now able to access Bitcoin through these ETFs, demand for the digital asset has surged exponentially, far surpassing its daily supply. As the supply halves again during the upcoming event, a never-before-seen supply-demand imbalance for Bitcoin is anticipated. In a recent interview, Saylor discusses his bullish outlook for Bitcoin in 2024 and beyond, emphasizing the limited window to acquire Bitcoin at its current price before it skyrockets beyond reach for many investors. Before we continue with the rest of the video, do check out daily 5-minute crypto newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part is it's absolutely free. They'll cover expert predictions, breakdowns of on-chain crypto data, and any breaking news you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now.
I'm not surprised they're successful. I expected them to be very successful. I think there's 10 years of pent-up demand. They're the most eagerly anticipated development in Wall Street. This is like Bitcoin coming public. It's like the IPO of Bitcoin, except it's like 10 companies simultaneously taking Bitcoin public. Because Bitcoin's a commodity. It's not a security. So the idea that that BlackRock and Fidelity and Grayscale and Bitwise and ARK, they're all taking Bitcoin public at the same time is a big deal. The fact that I'm not surprised they're successful as ETFs because Bitcoin's the apex ETF. The other ETFs are based on oil, like let's say commodity ones, oil, gold, platinum, silver, palladium, market baskets of commodities, natural gas. All of these things are defective as investment assets because physical commodities aren't scarce. Physical commodities can be manufactured in any amount with additional capital and know-how. So ultimately, the best of them is the gold ETF. But if a bunch of money flows into a commodity ETF, that just actually fuels capital into commodity producers. They just dump that commodity on the market, the price gets held down. So commodity ETFs were never that great an idea. On the other hand, comparing these Bitcoin ETFs to the S&P index, the biggest ETF and maybe the biggest development on Wall Street was the launch of the SPDR, SPY, in 1993, about 30 years ago. And the idea that you could create an ETF that represented a market basket of 500 stocks, that was big. And especially that was big because that came along at a point where people had lost faith in the currency as money, as a savings technology. So the S&P became money and that ETF became the monetary index. And that's why today, amongst, that's the most successful ETF. If you look at SPY and all the S&P index type ETFs, they have most of the capital in them. But the problem with those ETFs is that stocks also are not conservative. So if I increase the price of the stock by a factor of 10, you're getting more equity. Or if another way to say it is, if I take hundreds of billions of dollars of cash and I buy the ETF, like S&P ETF, the ETF has to buy all 500 stocks pro rata. which means they're going to have to go buy Tesla and Apple and Google and Meta at any price. They're price insensitive, even if they're overpaying. So when they buy it at any price, what they're doing is they're creating more equity because they're encouraging those companies to issue more stock. And then, of course, this is common sense. If the price of your stock doubles, the employees in the company with stock options, they sell the stock, right? They sell the stock option. When they sell the stock option, you put more stock on the market. So the price creates supply. There's a price supply elasticity there. And that's the same as you have with commodities. It's the same as you have with REITs, real estate investment trust. And it's the same thing with bond funds. When you have capital flows into all those other asset classes, you create supply of that asset. They're not scarce. Bitcoin's unique because no amount of capital flowing into a Bitcoin ETF is going to create any more Bitcoin. What we've got is 900 Bitcoin a day. And around April 16th to April 18th of this year, we're going to go to 450 Bitcoin a day. This will be the halving, but it will be the single most consequential halving in the history of Bitcoin.
Based on the most recent data accessible on BlackRock's website, the world's largest asset manager had acquired over 130,000 Bitcoin for its iShares Bitcoin Trust by February 23, 2024. As of February 14th, IBIT held approximately 130,000 Bitcoin, amounting to $64 billion. This implies that BlackRock procured over 20,000 Bitcoin in just 9 days, indicating a robust buying trend with no signs of abating. BitMEX research data indicates that BlackRock and other spot Bitcoin ETFs collectively attracted over $232 million in inflows on February 23, with IBIT leading the pack at $167.5 million in net inflows. Fidelity and ARK Invest followed with $52.5 million and $34.5 million, respectively. Grayscale's GBTC observed minimal outflows, losing only $44.2 million since its launch. Despite GBTC experiencing outflows of $7.4 billion, all 10 U.S. spot Bitcoin ETFs have recorded over $5.5 billion in net inflows. Michael Saylor believes that this unprecedented demand for Bitcoin will persist for many years. In his interview, the former MicroStrategy CEO elaborates on his Bitcoin outlook for 2024 and discusses the future trajectory of the leading cryptocurrency, anticipating it to extend until 2034.
I think this is going to be a good year for Bitcoin. I think we started out the year with the ETF approval, and that was a big milestone. I think that the success of the ETFs is another milestone. I think that the halving in April will be a third positive milestone. I think those three things are going to drive momentum, and I think all the marketing wars between the Wall Street firms is going to be positive, and I think the assets being normalized throughout the mainstream investment community. And so I think it'll just keep generating momentum from here. I think it's also worthwhile, I think, to make one point. I think that we're living through the Bitcoin gold rush era. And I think the Bitcoin gold rush era started January 2024. And I think it runs until around November 2034. So it's about 10 years. And I'll tell you why. Because 93.5% or so of the Bitcoin was mined at the beginning of this period. But in November of 2034, 99% of all the Bitcoin that will ever be issued will have been issued. And so that halving is very symbolic. People talk about Bitcoin, issuance coming out over the next 100 years, all the way till 2140. But the truth of the matter is, the last 100 years, you're only getting 1%. So think, and actually, of that 1%, 90 basis points of it is coming in the 12 years that follow 2034, and then it's 10 basis points, 0.1%. But practically speaking, all of the block rewards are de minimis starting in 2034. It's 1% over 100 years may as well be nothing, because the daily volatility and the daily trading volume is going to render that to be somewhere between third order, fourth order, fifth order of magnitude. So that being the case, really, this 10 years is your best chance to get Bitcoin, right? This is the gold rush because this is the period where there's still a lot of FUD. There's still a lot of uncertainty. People still aren't sure. They don't understand digital energy. They don't understand digital capital. They don't understand digital property. There's a lot of debate in the community. Is Bitcoin a currency or is it a property? Or, there's massive debate. And a lot of people say, well, it's a currency. And since it's not legal tender or because it doesn't move fast enough or I can't buy coffee with it, it's not a good currency. So there's a lot of confusion in the crypto community. There's a lot of mainstream regulators. They think it's currency. So you see bankers say, oh, it's a currency, but it's not a good currency because I can't buy coffee with it. I can't buy things online with it. And it's too volatile. And they think that's a criticism. And so they criticize it. And then people that think that they know what they're talking about, they hear some famous person say, well, Bitcoin is not a good currency and or the government will ban it, or it's not as good as the dollar or something. And so they get afraid. And they say, well, then I trust that guy, so I'm not going to buy it. So a lot of people are criticizing it for the wrong reason. A lot of people misunderstand it, and that creates lots of chaos, misinformation, stupid, misleading stories in mainstream media. It creates like bad takes on Twitter. It creates all sorts of confusion amongst Wall Street analysts. And so all of that fear, uncertainty, and doubt, and just basic confusion, and then misunderstanding, that causes a slow growth in demand, right? Like demand is growing, but imagine how much faster it would be growing if everybody had spent 100 hours, right?
In another closely related update, MicroStrategy's Bitcoin acquisition endeavors are just beginning. Despite recurring skepticism over Michael Saylor's assertions that MicroStrategy will perpetually acquire Bitcoin, he continues to defy critics. On Monday, he disclosed the purchase of an additional 3,000 Bitcoin, elevating their total holdings to 193,000 Bitcoin. Saylor's announcement stated that MicroStrategy procured the 3,000 Bitcoin for approximately $155 million, with an average price of $51,833 per Bitcoin as of February 25, 2024. Their cumulative holdings, obtained at an average price of $35,544 per Bitcoin, now amount to around $6.9 billion. While some investors might view buying at $51,000 as entering at a high price, Saylor contends that Bitcoin remains considerably undervalued compared to its future potential. What are your insights on Saylor's Bitcoin outlook and MicroStrategy's recent Bitcoin acquisitions? Feel free to share your opinions in the comments section below. For more Daily Dose Crypto news, check out these two awesome videos on your screen. Click now and we will see you on the next video.